Welcome to Grow Your Business and Grow Your Wealth. Gary Helt is excited to bring you another powerful conversation to help you grow and protect your business and finances. Today's episode is hosted by a special guest, personally selected by Gary, so you can keep learning and moving forward even when Gary is off the mic. Settle in and enjoy today's insights.
Welcome to another episode of Grow Your Business and Grow Your Wealth. I'm your guest host, Jack Reeder, sitting in for Gary Helt, CPA and certified tax consultant. Today, we're joined by Brian Weaver, CPA, MBA, founder of Brian Weaver Consulting, where he helps businesses navigate complex tax environments, particularly in transaction taxes and tax technology. With decades of experience blending compliance, strategy, and systems implementation, Brian brings practical insight into how companies can manage risk while leveraging technology to improve tax performance. Welcome, Brian.
Good afternoon. How are you?
Great. Let's start by taking a trip in the Wayback Time machine. What first drew you to tax and accounting as a career, and what were some of the important experiences you've had along the way?
The one thing I really like about tax is that it's changing literally every day, as we've seen, especially in the area of indirect and transaction taxes. Whenever somebody asks me a question, is this taxable or not? My stock answer is it depends. Depends what you're buying, where is it going, how is it going to be used, and even then, you probably need some additional information to make an exact determination. And that's the thing about the U.S. environment; it is so complex from a transactional tax standpoint that all the states are different. So 46 states plus Washington, D.C. have sales taxes, 5 states do not. And they're all different. They're all changing all the time. So last year, literally, there were 800 plus rate changes across the landscape. Most of the time it goes up, right? It rarely goes down. And there's literally, every month are different law changes that come to effect. So January and July are typically the two largest months when we see a lot of changes, but they can occur at any point. So, for example, I had a client that was doing business in Chicago, and they passed a transaction tax increase on literally December 29th. So there was no way for the content providers to have that out. So I had to go into different systems and make that update so to take effect on the first of the year. So
Wow.
when you combine, yeah, right, when you combine that tax environment with the technology environment, which we also know is changing every day, it really creates a unique landscape and a very challenging, environment for me that I very much enjoy because at the end of the project, I can still take out a pad of paper and write down, a couple pages of new things I learned on this project because it is such a challenging environment. And even when I come into a project I've done exactly 10 times before, there's something different, something very challenging about that 11th time that makes it, different or difficult. For example, just loading software once from a West Coast client, the database team was over in Singapore. So just coordinating that with the 16-hour time difference and getting permissions, and when people were not on lunch break and whatnot, was more of a challenge than you would want it to be in that case. So that's something that very much enjoy about this space and being able then to go out to businesses and really help them to manage this aspect because I especially see in the smaller and middle market businesses that if they have one accounting person trying to do it all, they can't. And this is one of those areas that falls by the wayside until it becomes a bigger issue. And I started out my career as an auditor for a couple states. So I've been on the other side. When an auditor comes in and you have a bad audit, it definitely affects the business because that's tax plus penalty and interest to boot that's coming out of your pocket that you could have collected from somebody else. So it really hurts these businesses. And it's really, not something that they really think about until it is, a much kind of bigger issue. I can think of a case a couple years ago where um, Washington State has sales tax, Oregon does not. And a Washington State auditor is sitting at the bridge and watching all these mattress trucks come over the river, delivering into Washington State. So he looks them up. Of course, they're not registered. They're not charging tax. Washington does an audit. The company owes several $100,000 in sales tax. They can't pay it and they go out of business. So those are the horror stories you hear about, and you definitely want to avoid if you put the right, processes, controls in place. And that's what I help companies do, because I come to the table with the tax knowledge, tax software knowledge. I've worked with Vertex, Avalara, OneSource, all the providers out there. The different ERP systems was the big one, such as SAP, or a smaller middle market, such as Dynamics, NetSuite, Epicor, et cetera. And then really looking at it from a business process and a project management standpoint to kind of put that all together, because transaction taxes touch every piece of the business, and it has to be right. Otherwise, you run into those problems. So getting the right people, processes, and some tools in place, and it doesn't have to be anything really elaborate, but you have to have that. Otherwise, there's no way you can manage, especially after, yeah.
I'm sorry. I was just going to say that story about Washington and Oregon. It reminds me, I spend a lot of time, and I've lived in Massachusetts for a long time, and I'm right by the border with New Hampshire, and I'm sure something similar is going on there, because New Hampshire is also one of those
the 5 states,
sales tax states.
Exactly. So
interesting.
After the 2018 Wayfair case, U.S. Supreme Court case, where South Dakota took the Wayfair company to court, and it was really over the collection of sales tax. So before, you had to have a physical presence or nexus, whether it was a location, an employee, a contractor, a repair person going in and out of the state. And Wayfair really blew that away and just said, okay, based on some economic criteria, and initially was set up at 200 transactions or 100,000 in business. They were smart. They made that carve out for the smaller businesses, and it passed through the Supreme Court. So that's the law of the land. So every state has adopted that provision now, and that has forced a lot of companies, because you're not just selling in your state or a neighboring state or 5 states, you're probably selling in all the states, and really have to look at whether you've met those thresholds and should be collecting. And I find that, however many years later, there's still a lot of companies out there that haven't complied. And it's, a really lurking time bomb that they have to take a look at, because any company that sells a good or service is going to be in this boat. And that's any business out there, right? Because that's what they're doing. They're selling some kind of good or service. So they really need to take some time, take a step back, and make sure that they're being compliant, collecting tax where they should be, and remitting it to the tax authorities. But when you look at, when Wayfair came in, New Hampshire being one of those states without any sales tax collection, what happens when a New Hampshire company then that has no system in place then has to collect tax suddenly for 46 different states? How do they do that? There's no way you can, just start doing that tomorrow. You need some systems and a process in place to do that and set it up effectively. And if you do, then that system should pretty much run in the background, do its thing, provide the right information, and make everyone's life a little bit better and easier along the way.
So that's fascinating. Brian, just curious, at what point and under what circumstances did you decide to get your MBA, or did that come before your CPA?
That came before the CPA. So that was when I first started out working. I wanted to, further my education and look at, other different aspects of the business. So I have a BS in accounting, an MBA in finance, a master's in human resource management, a master's in project management, and I'm a CPA. So I really wanted to look at different aspects of that business and how it's potentially run and how it kind of all comes together. So it turned out that tax was my, niche, and it's the expression goes, it's been very, very good to me. I'd like to claim I was a genius and plotted out this career path. It just kind of happened. It came together. And like I said, it's still at this point challenging. And, that's what gets me up in the morning, because no 2 days are the same. I never know what's going to come up. And even those days when it's kind of quiet, then, something kind of blows up somewhere, and, you have to put on your firefighting gear and figure out the best way to address it, because, these companies are in production, and the big companies, it's 24/7. There's never any downtime. They're worldwide. So it has to be up and running, constantly.
Sounds like it keeps you busy. So just let's sort of talk about the technology aspect, because, obviously technology in general has just, it's changed so much. I remember my first job out of college, and so this is, late 70s, early 80s, and I was working for a small construction company, and for some reason, the owners of the company asked me to investigate new computers, or they didn't have a computer system, so a computer system for the company. I remember talking to Digital, and I don't even think IBM was on the scene yet, but Digital and a few others that are obviously long gone. But
All right.
in terms of the technology that you've seen as it's changed in your area of expertise, tell me, how it's changed, how much.
It's changed drastically. So, like you, when I first started out, all the audit files had been done pen and paper, and you'd get the old audit file to review it. It was the old 14-column accounting paper, and you'd have to total the page to the next page and whatnot. I would have, gone out of my mind if I had to do that. So laptops were brand new at that point, even though it was really the size of a suitcase. It was about 30 pounds, but it was a computer, and that got me involved, very early with the technology aspect and working with information and pulling data and being able to evaluate it and determine whether tax applies or not. So I remember doing an audit of a hotel, and we had a spreadsheet with probably 30 or 40 columns with all the different revenue streams, because there was the rooms, there was the vending machines, there was the room they rent, catering, all that was different, and it's all taxed differently. So once again, how could they get their arms around that? And back in the day, they didn't. So we loved doing audits of hotels because we knew there was always a decent size assessment there, because they just couldn't do those things. But over the years, it's really evolved from the mainframe then to the PC client based software, and now everything is in the web. It wasn't too long ago when, especially tax, said, no, that's tax, that's confidential information. There's no way we're letting that out of our four walls, and now they can't give it away fast enough. So it's really just in a cloud somewhere, a tax application, and connecting your ERP, your billing system, to that to really run your transactions through. So that takes the maintenance, the setup, the troubleshooting, all that, all of your team's plate, and lets really the tax people be true tax people. And that's what I try then to, when I'm going through an implementation or a project with a company, is do that knowledge transfer and make sure that at the end of that project that they are the true owners and masters of that application, because they have to like it, they have to use it, they have to own it. So getting them up to speed on all these different aspects, and usually you're talking 3, 4 different tax applications that come into play. So that's a lot to throw out there. So I like to get them involved early, get them hands-on, because they're involved early, learning that they're as part of the design and whatnot, and therefore they feel they have that ownership at the end of the day. Because by the time you get something implemented, there's probably another version out already. So it's constantly changing as well. But there's been so many different tools over the years that can really make more accurate, better determinations than you ever could in the past. So once again, if you think through it, set it up correctly, leverage that software, then that's really going to help then drive your business, and once again make everyone's lives better and easier.
So, Brian, what trends do you see developing, and what kinds of things would you tell a business owner that they should be paying attention to in terms of what's coming down the pike, so to speak?
In the area of indirect transaction taxes, they
Yeah.
have to, constantly be looking out for those law changes, because that's what will, kill you. Just because today Illinois says, "Oh, freight's not taxable," doesn't mean next month they won't make it taxable. And a lot of states are making more services taxable every year as they try to expand, their revenue base. So just because something is not taxable in your state doesn't mean it's not taxable in the state next door. So that's why you have to be constantly aware and have those kind of updates. I get a number of different services I look at and see kind of what's coming down the pike, what's changing. There's a lot more movements toward taxing, digital items, because for years the laws weren't written that way. I remember first time we started doing telecom work, all the laws referenced landlines. there was nothing out there that referenced how cellular technology and taxation should work. So that was an evolving area, and some of that is still coming forth in as far as digital goods, especially if you're doing business in a number of different countries, such as EU. They have tax on digital goods there that you have to be aware of. So it's not just your state, the state next door, or the U.S. You have to really kind of look at a worldwide basis if you're a company of any size, because most likely you're shipping, providing your goods and services all over the world. So that's always something to take into consideration.
Yeah, it's definitely a complex area. In terms of technology, getting back to that, what are the big or the kinds of innovations that you're seeing that are developing now that'll be helpful going forward?
Of course, we know AI is the big buzzword these days, right? So more of trying to use that kind of technology to identify transactions. So it would say, are you sure you really want to post this transaction, this account, because it doesn't look like it belongs there? Or I've seen some other kind of functionality where you can kind of, before things are committed to a final state, review purchases and say, should I pay tax on this? Yes or no? And flag things based on dollar amount or software, some of the more kind of problematic areas that we run into, so they can be further reviewed. So doing a lot of that kind of work up front and providing a list, a report that someone can review it. Their time is then much more valuable and focused on those kind of issues that they should be looking at. So using more of the power and functionality in the software to drive that kind of information gathering is very helpful, and that's what's going to help drive a lot of decisions down the road, because we know that tax departments aren't overly populated. And I've seen some reports of the upcoming retirement boom within those areas. So you're going to lose a lot of very heavy, very educated people over the next number of years. So how are you going to replace them? Because the people coming up in public accounting, which is where I really got my kind of training, got exposure to this area back in the 90s with the ERP boom, they're not getting that kind of experience these days. So how are you going to replace them? That's a good question.
So one of the things you have alluded to or talked about is, having companies try to do as much automation as possible in terms of, handling these tax processes. So what are some common mistakes that you see when companies do that, but maybe, don't do it quite the right way?
So on the purchase side, generally, if you don't pay sales tax on something, you owe a use tax. So they'll get you one way or another, coming or going. So I see a lot of companies, especially, have issues in this area, and I do a lot of refund reviews and whatnot to find overpayments, because I found one company that I saw that donuts that they bought down the block for a meeting, obviously they paid sales tax on it. They were accruing use tax. And I said, why are you doing that? And they said, well, Joe, that was here, a number of years ago, said if we didn't have a receipt, we have to pay use tax. Likewise, at the same place, salesman meetings for a meeting in Missouri, and they were an Illinois company, they were accruing use tax on that. I'm like, why? Well, we weren't sure if we should or not. So they included it. I did a refund review, found them $80,000 in refunds, which went a long way to help them fund the technology project they were working on to get implemented to kind of clean up all that stuff. So that's something that I see all the time, is people like do something just because that's the way it's always been done. So I always come in, take a half a step back and say, show me your processes, your people, your systems and whatnot. And then we'll put it all together, find those pain points, get some good examples, and then figure out a path going forward. But just doing things the way, they've always been done isn't, always the best approach.
I want to get back to the, how you and others can stay on top of these constantly changing tax laws in these various states and countries. And you mentioned that you get information from different services. I remember that, I've never been an accountant, but I remember going into accountants' offices years ago and seeing those big binders that,
The black binders, yes.
like I guess all the tax information in the world was in those binders. But
Absolutely.
now I'm sure you get that information digitally. But
Yes.
how many different sources and is there an aspect of AI that can help sort through that information and summarize it for you, or how do you do that?
Yeah, I get a number of different services such as CCH, state tax notes. So I get a daily, kind of summary of different, court cases, rulings, potential new laws in different states that kind of keeps me aware. And that gives me, good planning ideas as well, because I remember, a lot of companies, a lot of states have manufacturing exemptions. So if it's being used in a manufacturing exemption, it can be, therefore exempt from sales tax. So that's a good saver there. And it found that they're manufacturing one company these electrical components. They'd start in plant A, then they pack them up in these kind of eggshell crate, containers that prevented electrostatic and any kind of damage during transit. Then went to plant B for additional processing. So found a case that said, you know what, manufacturing doesn't have to occur all under one roof. So you can go from plant A to plant B as long as it's a continuous process. In that case, it was, and therefore those containers and everything in between then was exempt. So always looking out for planning ideas as well, and that's why I kind of read through those, different notes every day.
Well, that sounds good. Is there if you were talking to, you mentioned it earlier, new people coming up through, younger tax professionals who are learning different areas of the business. What kind of advice would you give to them if they're interested in your field and tax technology, let's say?
So before, when you came into tax, you probably did it all. You did, federal, you did state returns, you might have did some property, payroll, you might have even done a little bit of international. Then along the way, it really became very much, segmented and specialized into different areas. So now when I was in the state and local group, you did, sales tax or income tax or property or employment tax or incentives. So it came very much specialized because when somebody has a question issue, they want, the expert. So, they, want to be able to call a guy and bring him in. You have to have a good breadth of different areas. I still read of all the individuals kind of stuff going on. I'm not an expert in that area by any stretch, but I still have to have that knowledge. But really, then you need to be the expert in your particular area. And once you kind of get exposed, then you'll find what your niche is, and that will then kind of lead you down the path you need to go. But then, the technology aspect is going to affect any of those areas. So you really then have to have really good technical skills as well and keep building that. And one thing I always emphasize to people is having not only good Excel skills, but other skills such as Alteryx and whatnot, and be able to work with large data sets, because with the tools and the power we have on our PCs, we can crunch a lot of data, a number of different ways and pivot tables and be able to, spit it out the way we want. So being able to have those skills and analyze that data is essential as well.
So we've talked a lot about technology and, um, in terms of how the transformation that's occurred in technology and the digital area in particular, how would you say that's changed the role of the tax advisor?
Yeah, before you were a number cruncher and filling out a lot of forms. So is that really, beneficial, the best use of anyone's time? I think we can all agree. No, plus everyone hates doing that stuff, right? It still has to be done. Compliance, returns, reporting to tax authorities. Absolutely, you have to get that done on the back end. But if you have, better tools in place to do that and to automate that, and that's something that I see a lot of companies these days as well. They're just like they can't give that function away fast enough. because they don't want to have those resources in-house and doing those things and focusing on those tasks when they could be focusing on, the higher value items that they should be.
So if you could just give one piece of advice to every business owner, what would that be that you wish, every business owner understood? One thing about, taxes.
Know where you're doing business, how you're doing business, and the potential implications of doing or not doing the right thing in those areas. Because a lot of times, I remember I was doing work for a large company that had robotic machinery. So I saw that they were registered in 11 states. I'm like, that can't be. Give me a report of where they're going out and actually setting up and installing these machines. And of course, it came back 2 feet high, and they were in every state and locality across the U.S. But they wouldn't have realized that unless they were asking the right questions. So you got to know where you're doing business and the potential impact of the goods and services that you're selling and whether they're taxable there or not. Because once again, then that can come back and bite you if you're not doing it correctly. And ignorance of the law is, once again, it's no excuse in this case. I always hated, especially smaller companies, give them a large tax bill, but because they didn't really know or do better. But that's what it was at that case.
Boy, it's amazing. And so Brian, this has really been incredibly insightful, and I really appreciate you breaking it down. You know, talking about some of the practical aspects of tax strategy and technology in a way that almost any business owner can use it. For our listeners, if you want to grow your business and protect your wealth and your income, understanding how tax strategy and systems fit together isn't optional, it's essential. Brian, thanks again for joining us today. It's great to have you on.
Thank you very much. Greatly appreciate it.
And listeners, be sure to subscribe to Grow Your Business and Grow Your Wealth so you don't miss future conversations designed to help you build smarter, more sustainable businesses. I'm Jack Reeder, guest host for today, and I look forward to seeing you next time.
Registered representative and financial advisor of Park Avenue Securities, LLC, PAS. Security products and advisory services offered through PAS, member FINRA, SIPC. The Bullfinch Group is not an affiliate or subsidiary of PAS. This firm is an agency of the Guardian Life Insurance Company of America, Guardian, New York, New York. Life insurance offered through the Bullfinch Group Insurance Agency, LLC, an affiliate of the Bullfinch Group, LLC. The Bullfinch Group, LLC is not licensed to sell insurance. California Insurance License Number OF 11617. Links to external sites are provided for your convenience in locating related information and services. Guardian, its subsidiaries, agents, and employees expressly disclaim any responsibility for and do not maintain, control, recommend, or endorse third-party sites, organizations, products, or services, and make no representation as to the completeness, suitability, or quality thereof. 2024-169104, expiration 226.